Hello, and thank you for tuning in today. I really want to extend a thank you to Crystal for letting Desjardins here have a conversation with you in regards to a product offering that's unique in the industry to Desjardins. To kick things off, I'd love to talk a little about who I am and who I'm representing at Desjardins Investments. My name is Benjamin Sylvester. I'm a local Albertan here in Calgary. I'm a regional sales director for Desjardins Wealth Management. And today we're going to be talking about a unique product, like I said, to the environment that's going to offer you some benefits over to traditional GICs and cash accounts. So to get things started, Desjardins is a incredibly large asset manager within the Canadian universe. We have $409 billion worth of assets. We've been in the industry for over 120 years. We service everyone from banking, insurance, investments, and everything else within under the financial umbrella. Now, what's really important though, when we think about today's environment, is growing our money with the peace of mind, knowing that we're not going to lose it. We're looking at stock market gains, and we're seeing the volatility. We're seeing all the global macro things happen between wars, political instability, and we're really unsure about if that's somewhere where we want to put our savings. It's truly gut-wrenching watching the stock market go up and down within the volatility we've seen in the last 3 years, knowing that that's what our backbone, our savings are supposed to be relying on. Things that we've considered is looking at term investments where we have that security with a GIC, we're guaranteed a rate, but we know that that is not going to be enough to really grow that investment to where we need to be at the end of the day. Having inflation really, bite us at the pump, bite us at the grocery store and everywhere else, we really need something that kind of meets us in the middle between these two kind of options. These equity-like growth, but real amount of volatility versus something with no volatility, but not enough real growth to get us to where we want to go. And the beauty of that is there is a product that does kind of meet us in the middle here. And that's going to be Guaranteed Advantage, Desjardins' flagship investment product that is quite unique in ability to offer both of these worlds. Now, before we get too much into Guaranteed Advantage, let's look at what's going on and why this is such a paramount period of time where products like this are so vital. We've seen North American stocks been in bear territory for over the last year, and we've seen exponential volatility, whether it be the Magnificent Seven shoot the lights out, or traditional fundamentally strong companies being valued at a discount due to unprecedented waters. With that, know that the volatility within the equity market isn't just volatility, it's also going to be the backbone of your retirement. Having all of our eggs in one basket, like an equity portfolio or even a couple stocks, we know time and time again, history does have something to do with what we're seeing. And with that, we can actually dictate, and we know mathematically that a loss of even that 10, 25, or 40% does not equate to a 10% gain, a 25% gain, or 40% gain to get us to back where we were. Because there's time value of money where a dollar today is not equal to a dollar later, we have to understand that losses in our investment portfolio, losses in our retirement saving are so incredibly important to dictate what our retirement is going to look like. For a 10% loss, we have to make 11 to get it back. For a 25% loss, we have to make 33% to get where we were. And for a 40% loss, we're looking at 67% return to get us just to where we were. And that's scary. Think about what's happened over the last 3 years coming out of COVID. We've seen drops of 40% happen in a few days. We know that these things are possible. And we do know with taking on top of this, withdrawals out of our accounts while the markets are down are just going to compound this problem. So we have to make money to make sure that we are able to participate on growing that investment while not taking that flip side of losses that are substantially disrupting our retirement savings. With that piece, over the last 10 decades, the 60-40 portfolio has been what we've kind of deemed as the all-season portfolio, something that's going to weather all storms. But unfortunately, that might no longer be the case. We've seen yields come up on a lot of our sovereign bonds all over different countries around the world, Japan being the anomaly just due to its heavy focus within on debt. However, these bond rising yields still have issues where they're absolutely bleeding out bond portfolios and bond holdings due to the fact that these interest rates are decreasing their prices. And that hasn't been able to cut out really that safety that we've needed it for in that all season portfolio. Now, interestingly enough, where we are in today's market, we are seeing alternatives with GICs offer very high and very attractive rates of 5, close to 6%. However, over a historical long period, this dating back to 2008, we still know that bonds, GICs, are absolute pennies to mountains of what equity can return. So we know that there's definitely a trade-off between these two, where we can see the S&P growing substantially higher from a minimal $10,000 investment versus a one-year GIC. How can we meet in the middle with something that's going to offer you that safety of a GIC with that flat line, without that big drop in 2020, and still get you somewhere where you need to be for your retirement? The key solution is a product like Guaranteed Advantage that is offered solely by Desjardins. What it really is, to simplify this slide that has quite a bit going on, is three things. It's our market-like participation, so our equity exposure. It's 100% principal guarantee. So as long as you hold this to maturity, you're guaranteed 100% of your investment. So if you give us $100,000, no matter how the markets perform, even if you're withdrawing on an example like March 2020, you guaranteed that $100,000 going back in your bank account at the end of the investment. And the final piece is there's no management fees. There's no expenses working with this product. You're really able to offer a fully holistic solution that's going to meet your needs. On top of this, there's a 100% death benefit guarantee. So even if you pass away through the life cycle of your investment, we know that that money is going to your beneficiary. So even in a market downturn, that $100,000 you gave Desjardins, that $100,000 is guaranteed to go to your next of kin, your spouse, and make sure it's going to be used in their way without those market downturns. Now, the reason we're able to create a product like this is because we're not a bank. That's something we strive and we take very seriously to heart, is that we're not someone like a bank where it's just a rate. We're looking to provide a solution. This means that we're able to have that insurance wrapper on this product that offers those unique benefits that no bank can offer. So that's no probate fees on your death. The death benefits paid out in a few days. So instead of an estate taking close to 2 years to pay your beneficiaries, we're able to bypass that whole process, get the money in your kids' hands sooner than later. As well as it is protected against market downturns. So unlike a mutual fund, a seg fund, or even a cash account, if the markets are down, we can guarantee whatever you've given us as your principal is going to your next of kin. To put that in perspective, that close to 2 years for a GIC when you pass away, you're not only going to have that money locked up until it reaches the end of your estate, you are also subjected to quite a bit of fees going through that. Probate fee here in Alberta is $525, accounting fees, executor fees, legal fees, and redemption fees. Overall, you're looking at close to 10 to 11% of your investment of $100,000 being taken away or eaten up in the means of that estate process. With a product like Guaranteed Advantage, where we have that death benefit guarantee, that $100,000 you gave us, we guarantee will go to your next of kin free of charge. Now, going further on this, what our product has done over the last couple periods here, these are two really great examples. This is our global diversified basket on the top, and at the bottom, our Canadian diversified basket. Throughout the life cycle of this, we're tracking that equity exposure, with the top one being capped at 60% and the bottom one having unlimited upside. So however the market does, you get to participate within that, and how it's tracked along its life cycle. You can see back in January 2020 or March 2020, when the markets crashed out and then rebounded back, you get to participate in that whole period knowing that you're never going to lose your principal. You're going to at least get that equity-like upside potential. Now, something I'm showing you today, I do have to put a caveat here that this is subjective to our current campaign of December 2023. So these deposits do get locked in on November 17th, and we'll have new rates come out on November 18th that will be slightly different, but we'll still offer all the great benefits that we've gone over. So our campaigns run in such a 2 to 3 month manner where we offer different baskets like our Canadian Diversified, our Consumer Staples, ESG Global Diversified, and our Global Opportunities, ranging from terms as short as 2 years to as long as 5 years. With 2 years having more caps on their upside, where the 5 years has higher unlimited opportunity where you're fully participating in however the market does. To put that into perspective, something like our 2-year and 2-day basket, we're offering 0 to 28% on our product. We're at that 500 to 25,000. We're able to offer double, if not quadruple, what a normal GIC rate is offering within that same term period. A normal GIC is offering 5% over a 2-year. We times that by 2, that's 10%. We're offering close to 30% on that 2-year period, a triple upside potential of what just a traditional GIC. Now with more larger deposits, just like in any wholesaling opportunity, Costco versus Loblaws, the more we have, the more we're able to offer. So with a $250,000 plus deposit, our range goes from 0 instead of 28 to 33.6%. Now, a different opportunity that we also have here is this one right in the middle, our 5 to 17. What this indicates is that over that 2-year period, for example, you gave us $100, no matter how the market does within that 2-year period, you're guaranteed at the 2 years and 2-day end of the cycle, $105 will be in your bank account, no matter what happens, as long as you hold it to maturity. Alternatively, though, if the markets do participate upwards, you're able to get up to 17% on that investment, which offers you a guaranteed portion while still being able to offer more than that 10% that a GIC would be able to offer you, almost double that. Now, the other piece we have here, once we go look something into our 4 or 5 year, we actually have unlimited upside on our larger baskets on our longer term. Additionally to this, we also have participation rates that give you more than point for what the market does. So 120% participation here, this number in the bottom right corner, indicates that if the market does 10%, let's say over a 4-year period for simple numbers, you're going to walk away with 12. Essentially, what a 120% participation equates to is a 1.2 multiplier bonus at the end of your investment. So 10 would become 12, 20 would become 24, 30 would become 36. You're getting exponential return potential on this equity-linked basket versus a normal mutual fund, stock basket, or even a segregated fund. You're getting substantially higher upside than you would with just a traditional investment. And it does get better. On our baskets, like I said, we've got our Canadian Diversified, our Consumer Staples. Where I'm going to kind of focus a little bit is on our Global Opportunities. This is one of our more prevalent baskets because it does have that higher upside potential. And what we have with this basket here is a globally diversified, sector diversified, and geographically diversified offering. We've got Algonquin Power, CIBC, Manulife, Densco, Thomson Reuters, TELUS. Really looking for market participation, not market speculation. So we're not going to put all of our eggs into one basket like energy or into something like Louis Vuitton or Tesla. We really want to have that broad-based exposure to really get what the market wants to do overall, as well as invest in companies that are traditional blue chip and large enough and sizable enough that we know that they're not going to be a company that defaults in a credit crunch or in another downturn. Now, with saying all this, what I think is most important is our track record of excellence. We've been doing this for over a decade, and there's 3 statistics that we can talk about that really pull this all together. First, 88% of the time, we've outperformed GICs. Number 2, 97% of the time, we've exceeded the annual minimum. So those zeros, that's 7, 97% of the time, we at least get something better than nothing. But the most important number is that last number, that 78. A 3 out of 4 batting average, historically saying that we've hit the top. So that 28, that 31, that 33, the 50, we have hit the top almost over 3/4 of the time, historically speaking. We have a track record that really can be backed and say we've done well. Now, with these strategies, something that we can additionally add to instead of just buying one set and forget is we can create something like a laddering strategy. And this is something Chris will definitely be able to help you with if this is something you're interested in, and go over the benefits and the opportunities that we can create with a strategy like this. With a laddering strategy, we remove the risk of market cycle where there's peaks and troughs throughout time. Somewhere like 2008, we're in a trough. The next couple of years after, we're in a peak. We're able to diversify our sell discipline and be able to participate on all market pieces to diversify that what's going to happen in 2026, what's going to happen in 2027. We don't know if there's going to be another financial crisis or another war, but what we can do is at least have our investments diversify their sell to make sure that over a period of time, we track on average, better than worse. With that, it's a way to protect your principal, protect your investments, add a guaranteed source of income. It allows you to participate or create a similar annuity-like payment structure with no MER. And it's an opportunity to still grow that money instead of having a fixed rate like an annuity. This is a winning piece of an investment where we're really able to diversify, participate in higher upside, and lock in the awesome rates that we do currently have with this laddering strategy. An example for simplistic say is a 65-year-old with 200K looking for 5% income per year. We put that 200,000 into a 5-year ladder, a 1-year GIC, 2-year, 3-year, 4-year, 5-year, equating to roughly about 40,000 per year. And that means that over a long enough period of time with even these minimal rates of returns of 0, 2, and 3, which we hope we can do better with equity-linked products, we can make that money last as long as 33 years versus a product that has 0 return and we just take it out of a cash account that would last shortly as 20 years. So almost an additional 13 years with even that minimum rate of 3% return. Now, going back to it, like I said, we do have guaranteed income that will at least get you that 20 years, but potentially upwards of 33. It is an opportunity to diversify again within those market cycles. And with this, we still have that beneficiary designation. So when we do run this laddering strategy, each one of those tranches is going to have that ability to move that money over if you do pass away to your next of kin, bypassing estate, bypassing probate. And there's no risk to your principal. We know the one thing we're always worried about is that market downturn. We can guarantee that that principal has stayed safe with a product like this. Now, to close it off, I think one of the best examples of this product is how we're using it in our day-to-day life. For someone like me, someone very close to me has gone through cancer twice. On the second bout right before COVID, leukemia happened. They had their investments, was basically the house sale. With that, they were looking at somewhere between 650,000 in their 70s. It wasn't enough money invested in a GIC to last the rest of life. Longevity was the risk. So we had to grow that money. We put this person with a planner, just like Crystal, and we talked about the different situations that could occur where they run out of money too early. And Guaranteed Advantage was a solution that fit with them and really was the ability to have that beneficiary designation to know their spouse was going to be taken care of, know that their money was not going to outrun them or they're going to outrun their money. And finally, that low cost solution. We know that things are becoming more and more expensive. Having a no MER product and a no cost product really resonated with their needs and their value proposition as a person. So to really close this all together, the 3 things I think is most important about this product is that market-like participation, the 100% principal guarantee, and that no MER. It really does meet the middle between that equity-like exposure with a horrible volatility and that guaranteed interest rate that's just not going to quite make it to where we need to be for retirement. So I want to thank Crystal for letting us speak on behalf of Desjardins for being able to bring this product. Thank you for your time and listening. If you do have any questions, please reach out to Crystal. She'll be able to relay any questions you have to me. Thank you and have a fantastic day.